Good afternoon, everyone. This is Edward Talisse for Chelsea Global Advisors and the CQF Institute. I'm sitting here in the offices of Fitch Learning in Lower Manhattan on the 7th of October, 2014. Chelsea Global Advisors and the CQF Institute intend to present weekly webcasts that talk about investment themes going on in the global capital markets each and every week. Our intention is hopefully to establish a dialogue with investors, traders, CQF candidates, and CQF alumni, and other people that are interested in trying to improve and make some money for themselves or their clients in the capital markets. Since today is our first talk, I thought it would be a good idea to review some of the investment environment metrics that our firm, Chelsea Global Advisors, looks at to make asset allocation and timing decisions. We go through two broad metrics that matter tables each and every week before we make any move in the markets. Key point on these metrics that matter is that they've been developed over a very long period of time and that they suit my own style and my own feelings about how to approach the market. If you're going to be an active trader or active investor or trying to help clients figure out and decide what's going on in the capital markets, you need to develop your own toolkit to decide for yourself and for your clients what are the best metrics that matter to you. So I'm just going to jump in right now. The first table that we look at is something that I call the investment horizon, medium-term outlook. By medium-term outlook, I'm talking about the next 6 to 18 months. That's a typical horizon for a trader or an active investor. I first assign weights to a number of different metrics. I think on these metrics I have about 20 or 21 different market indicators. I assign weights to those indicators. The scales are very simple. A high indicator is weighted 3, a low indicator is 1. Each of those indicators is then assigned a RAG rating, either being red, which means that it's not at all supportive for risky assets, or green, which means that's highly supportive of risky assets. I then simply do a weighted average score of the weight times the score for each and every market indicator. Market indicators are fairly obvious, and there are lots of quantitative benchmarks and tools that you can use to assess these indicators on your own. So for example, market risk, the first one up there, a lot of people would typically assess market volatility, either implied or historic volatility, as a good assessment tool for that one. There's plenty of other tools that I look at here on this page to come up with what I consider the investment outlook for the medium term. This last one, which was done yesterday, came up with an overall score of 57, which, based on a scale between 0 and 100, indicates to me that the outlook for risky assets is fairly constructive over the medium term. Next, I look at more detailed metrics on a weekly basis, and these metrics tend to give me a better indication of where we are in the investment cycle and hopefully provide me with some ideas either on asset allocation, timing, or security selection. The first set of metrics that I look at is what's going on in the foreign exchange and the interest rate market. I look at interest rates and FX rates throughout the world, but obviously I concentrate on the ones for the biggest economies. For instance, what's going on in Japan, the Eurozone, and the United States. I also look at interest rates both in nominal terms and in real terms. I look at the slope of the yield curve, and I look at the slope between the 5-year and the 30-year yield spread. Moving on, I look at some valuation indicators. I tend to look mostly at the U.S. stock market. Although I recognize and I very much appreciate that there are markets outside of the U.S., and for most of my career, I worked in Europe and Asia. However, I do feel at this point in the investment cycle, the U.S. is really in the driving seat. I look at valuation metrics on the S&P. So, for instance, I look at the price-to-earnings ratio and the dividend yield. I look at OAS spreads on BBB securities. Right now, I also look at liquidity. Liquidity is a very interesting and dynamic factor in the markets, and right now the markets feel that liquidity conditions are going to change for the worst. However, in my own investigation, I conclude that liquidity conditions right now are as robust and as supportive of risky asset investments as they have been in many years. I also look at typical fear and greed indicators such as the VIX index. I also look at the equivalent of VIX index for what's going on in the Treasury bond market. There's a host of indexes that you could look at for yourself to decide if the market is trading in a risk-on or risk-off attitude. Lastly, I look at sector performance of the U.S. stock market and some other sectors versus the overall market. The overall market is benchmarked by the S&P 500 index. The stock market sectors tend to be benchmarked by various ETFs that give you exposure to those sectors. These are the metrics that matter to me. Over time, we're going to go through these and explore them in a little more in depth, and hopefully between us, we will get to a point where we can make some reasonable asset allocation and timing decisions in the market. Thank you for listening. I look forward to next week's session. Edward Talisse, Chelsea Global Advisors and CQF Institute. Thank you.